Oh, good morning. Welcome to Dornbush Download number 193. Good morning, Rod.
Morning, Michael.
Yeah, a bit to talk about, as always, this morning. Telstra, Rod, up on the radar again. Market update from the guys there at Telstra. Look, probably nothing of great surprise. Basically coming out and said that 8,000 jobs are going to go. Environment's pretty tough. Interestingly, Telstra's labour costs to earnings are actually one of the highest of the telcos, certainly in Australia. Around about 20% of the earnings numbers go in labour costs. So when you compare it to, say, Optus, which is around about 15%, and some of the smaller providers even around the 10% mark. So they've obviously seen the labour cost as something they need to work on. Of course, any business labour costs are your biggest on paper expense, of course. So, it'd be interesting to see how Telstra manage that one. Of course, there's been a bit of criticism about how Telstra handles a lot of their faults and problems and that sort of thing. So obviously a lower labour force isn't going to sort of help that. Obviously they've got to spend a bit of dough, get the technology right and all of that sort of thing. But no real big surprise from Telstra. Market's not liking the news. It's probably
down about 5% this morning.
Yeah, a bit more devil in the detail. They did rally up in the last few days and they sort of got up as high as I think 298 there a couple of days ago. But yeah, certainly they're taking a bit of a haircut today. And of course, again, there'll be a bit more detail coming out in the full year result. But dividend payment's going to stay the same. But again, no real forecast as to what the dividend might be in the next financial year.
But obviously, it's been suffering for the last 12 months. I suppose in a good way, it's good to see management doing something. 8,000 jobs, that's doing something, all right. So yeah, anyway, they're doing something. They're taking action. If it's the right move, it's to be seen. Yeah,
telecommunications sector's been struggling for the last couple of years now. I think last 2 years it's been the worst performing industry group. So yeah, all those companies are struggling in that space. But Telstra, a bit of an update today again, a bit more devil in the detail, and a bit happening in housing prices too, Rod.
Yeah, for sure. A few statistics have come out in regards to housing prices in Australia. Sydney and Melbourne their house prices have gone down over the last 12 months. So it's rebalancing the property market essentially, because you'll see your Brisbanes and your Canberras, Adelaide, they're all increasing in the last 3 months, and your Sydney, Melbournes have come off in the last 12 months. So, and the real benefit of the property market in the last 12 months has been your commuter suburbs outside Sydney and Melbourne, like your Ballarats and your Geelongs and your Newcastles and places like that. Property prices in those regions have increased around your 5 to 10% increase over the last 12 months. So people have obviously, it's got too expensive in the middle of Sydney. They've moved out to regional areas and commuting. So it's driving property prices up in those areas.
Yeah, and they have had stellar runs, haven't they? Particularly Melbourne, I think, is probably more so, but Sydney as well has had an enormous rally in property prices the last few years. No real surprise, I guess, that there's a breather happening and probably going to continue to drop, I guess, over the next 12, 18 months or so.
Well, it's a good thing in the respect it takes heat off interest rate rises as well. Like the Reserve Bank's been watching the Sydney and Melbourne markets, and if they were overheating too much, they potentially would have put interest rates up quicker. But now they've come off. It takes the pressure on interest rates going up. So that's a good factor in that regard. So
no, definitely. And the US-China trade war continues to evolve by the sound of it.
Well, it's like a tennis match. Like Mr. Trump came out and said, we're going to put $50 billion of tariffs on Chinese imports, and then China comes back with a counter offer. Then Trump's gone up to $200 billion. So yeah, it's just a tennis match backwards and forwards. But in saying that, pretty much all markets overnight have suffered from the unknown nature of how it's going to end. So
it's going to be a real watch this space, isn't it? It's probably going to keep developing over the coming months for sure. But I think ultimately tariffs certainly historically you know, you talk, well, certainly read from most economists, don't really do any great, great justice to any country over long periods of time. There might be a short-term kick, but, and again, you know, they're sort of undoing decades of trade negotiations, so seemingly in the matter of months. But yeah, I guess we'll just wait and see how that all transpires.
That's exactly right.
Yeah. I think that's about us, mate.
That's about it for me.
Yeah. Thanks for watching. See you next time.
Thank you.